I'm Grant Mercer, this is Storm Stock Solutions, and we're setting you up for the trading day ahead. Our job here is simple. Bring some clarity to the chaos before that opening bell rings. Today's tape is shaping up around three big forces: discipline in big tech, financing risk in some high flyers, and a consumer that's feeling squeezed even as the market sniffs a year-end rally. Let's start with big tech. According to reporting from MarketWatch, Meta has ignited a rally after word that Mark Zuckerberg is targeting what investors have called a black hole of spending. The company is reportedly planning to cut its metaverse budget by as much as 30%. That doesn't just shrink a line item, it sends a broader signal. Meta wants to show it can fund AI and growth without writing a blank check to every futuristic project. Traders are likely to see that as a valuation support story for mega-cap tech. When a heavyweight tightens the belt on long-shot spending, it can justify higher multiples across the group. Another tech pillar in focus is Microsoft. A separate MarketWatch piece walks through why its controversial OpenAI partnership might actually be a safety net for the stock. The argument from one analyst: Microsoft has effectively offloaded much of the operational risk to OpenAI while retaining the strategic upside in AI. In plain English, they get the benefit of the technology and the ecosystem without putting the entire balance sheet on the line. Into the open, that reinforces the idea of Microsoft as one of the safer ways to ride the AI wave, at least in the eyes of many institutions. In terms of overall market tone, technicians highlighted by MarketWatch are talking about a possible holiday breakout in stocks that could even pull gold and silver along for the ride. The thesis is classic seasonal strength. If December tailwinds kick in, some see potential for all-time highs before year-end, with metals benefiting from the same mix of liquidity, lower real yields, or just broad risk appetite. So as futures trade this morning, pros will be asking, do we see confirmation of that breakout setup? Or is this another head fake at resistance? Now, opportunities and strength as traders see them. Meta itself is front of the line. Cost discipline plus AI exposure is exactly the cocktail the market has been paying up for all year. The seasonal breakout story keeps large cap tech, semiconductors, and even precious metal plays on the strong side of the ledger to start the day. And within chips, a note flagged by MarkWatch from TD Cowen calls out Applied Materials as a quieter beneficiary of what they describe as unprecedented momentum. Upcycles in both DRAM and leading-edge foundry capacity. That positions the semiconductor equipment space as a theme many traders are watching on pullbacks and breakouts alike. Again, not a recommendation, just where the radar is pointing. We're also seeing strength in a very different corner of the market: beauty. Claudia Assis at MarketWatch points out that mastige, that middle ground between mass and prestige, is still winning, and Ulta's results just proved it. Even as consumers trim elsewhere, they're continuing to spend on cosmetics and skincare. That reinforces a key narrative. People may cut back on big-ticket items, but they still spring for affordable luxuries. Traders will be watching specialty retail and beauty suppliers as pockets of resilience within the broader consumer complex. On the risk side, there are definitely areas to handle with care this morning. The standout is SoFi. According to Mike Murphy at MarketWatch, SoFi's hot stock dropped more than 6% in after-hours trading after the company announced a $1.5 billion stock offering. New equity means dilution, and even if management pitches it as fuel for growth, near-term traders usually sell first and ask questions later. This will be a key tell for the fintech and high-growth financial space. Do buyers step in on the dip, or does the pressure spill over into other richly valued, capital-hungry names? Costco is another caution flag. Tommy Kilgore reports that Costco's stock has turned negative for the year as U.S. comparable sales growth decelerated, still up, but at a slower pace than the prior month. For a company that's been a poster child for steady defensive growth, that slowdown matters. It hints at a consumer who is becoming more price-sensitive, even at warehouse clubs known for value. If a name like Costco loses momentum, investors start to question how much longer broad retail can outrun the affordability squeeze. That brings us to the macro layer. Jeff Ferry at MarkWatch digs into what he calls America's deeper affordability crisis. His piece argues that the core problem isn't tariffs. It's structural cost pressure in 5 essentials: housing, food, healthcare, childcare, and energy. The unaffordability 5, those bills were climbing long before the trade wars, and they remain elevated. For markets, that's the backdrop behind nearly every consumer story. When fixed costs take a bigger share of income, discretionary spending gets more fragile. It explains why some retailers are seeing slowing traffic, while others that cater to value or small indulgences are still hanging on. A couple of under-the-radar stories also deserve a place on your watch list today. In media and streaming, Lucas Alpert at MarketWatch highlights that even Paramount now believes Netflix is winning the bidding war for Warner Bros. Discovery, and Paramount is calling the process unfair. If Netflix does end up securing a major studio and content library, it could reshape expectations for consolidation, pricing, and bargaining power across the streaming landscape. It's the kind of storyline that may not move the tape minute by minute, but when a deal actually lands, it can reset valuations across the group. And away from the stock tickers, another MarkWatch feature points out that many meticulous early retirement savers, the FIRE community, are rethinking their plans because of soaring health insurance costs, especially with certain subsidies set to expire in 2026. While that's more of a personal finance story, it feeds back into the macro. Rising healthcare premiums are yet another weight on household budgets, reinforcing that unaffordability 5-5. So as we head toward the open, here's the setup. A market eyeing a potential holiday breakout, powered by disciplined big tech and strong AI and chip narratives. Selective strength in categories like beauty, but real pressure points in categories like beauty. Capital-raising growth names like SoFi, and in retailers encountering a more stretched consumer. Traders will be watching whether futures follow through on the bullish seasonal story, how Meta trades on its spending shift, and whether SoFi's dilution shock remains contained or sparks a broader rethink and speculative growth. We'll be back with intraday updates once the cash session is underway to see which of these themes actually seize control of the tape. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.